Hi, Jonathan York from Bay Financial Partners, looking at the investment markets. In the end, no real surprise that Greece did sort of cave in and accept the austerity packages that were proposed by the creditors. Really they had very little option. But it now sort of places Mr. Tsipras and his party in a very sort of strange position where he was elected on the anti-austerity packages that he was going to stand up and not accept these, and now he's sort of 6 months later he sort of caved and really accepted a package that was far worse than that was being initially proposed. But what it has done is kept the Euro bloc together, and now it'll just be interesting to see on the debt negotiations to see how much of sort of debt reduction package can be put through that is acceptable to all parties, because certainly that needs to happen for Greece to move forward. Elsewhere, equity markets still a little bit nervous. Some interesting results coming through in the earnings season out of the US. Some markets performing, some companies performing pretty well. Certainly, Amazon has some pretty good results, but others are a little bit mixed. And obviously, you've still got that sort of ongoing situation in China with a very nervous and sort of volatile market over there. No surprises for the Reserve Bank of New Zealand cutting interest rates down to 3% for the OCR, and indicating that a further potential cut in September is likely as you've got sort of a weakening economy. But after that, it's sort of a little bit sort of mixed really, because they're talking about inflation getting back towards 2% with a falling exchange rate, and that's going to be interesting when you put that with the rising housing market out there. And it's very interesting to see what happens to interest rates in the sort of second half of 2016. Because potentially you've got, a further interest rate cut coming in September, and then potentially a pretty sharp reversal as inflation starts to sort of spike up on the back of the exchange rate, and plus a reasonably rampant housing market as well, which obviously the Reserve Bank is very wary of. Could be interesting as well to see the next sort of issuance that come through in sort of the bond markets. Obviously with falling interest rates, from the issuer's perspective it's a pretty good time to issue paper if you need it, because obviously you're going to have to pay less in terms of interest. From the investor's perspective, obviously it's not quite as good. If you're locking in lower rates for sort of a 5 or 7 year term, potentially that could have some implications out there in sort of 2 to 3 years time if interest rates do start to rise and you have to realise some of that capital. Now, obviously, these falling interest rates is not good news for investors who've got money sitting on TDs in the banks. Those term deposit rates are going to be falling, and now potentially getting sort of around just sort of 3%. It does make it pretty tough out there. Maybe it is a good opportunity to look at some of these high dividend shares, certainly some of the property trusts out there with their sort of pie structures as well, where you're getting a net return. You're getting about a 5% return out there, or around that sort of level, which obviously compares pretty favourably to around sort of 3 to 3.25 on a term deposit. That is a gross return. So if you're interested in those, say looking at those high dividend shares and other sort of income options out there, call us on 0800 867 323, or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.